Statistics Canada reports that the economy ended a volatile year with a contraction in the final quarter of 2025, primarily due to businesses reducing their inventories. However, our next guest highlights that the slowdown in business investment is a particularly concerning development. Let's welcome Pedro Antunes, Chief Economist at the Conference Board of Canada. It's good to have you join us. Thanks so much.
Oh, well, it's a pleasure. Thanks for having me.
So let's start on that note then. Why is that so concerning to you?
Well, I think investment plays into the whole story around productivity and our productive capacity. Private investment in particular, if we're looking at non-residential, so anything but housing, think of structures, think of intellectual property or machinery and equipment. These are the things that add to essentially our productive capacity, our productivity, if you'd like, as well, but also tend to create future jobs. So we're seeing, because of all the uncertainty and the aspects related to access to the U.S. market, I think we're seeing essentially businesses sitting on their hands here with respect to investing in that capital.
And when it comes to businesses reducing their inventories, are companies trying to lower their holding costs? Or are they preparing for decreased demand, or is it a little bit of both?
Well, actually, I think that's the one little bit of good news in the accounts that we got today. We've been seeing this kind of buildup in inventory. So you can imagine, for example, if you're a wholesaler or a retailer, and if all of a sudden you have consumers aren't showing up at your door, you've brought in all this inventory, you're not able to get rid of it. That's a concern. And we've been seeing a buildup in inventory for a few years now, with some concern about when we were going to see that kind of come down. And in the last quarter, in fact, and with the revisions through the year, Statistics Canada has told us now that, in fact, inventories have come down. So that takes away from economic growth, but it suggests perhaps that, essentially demand for some of that has been a little bit better than expected from a wholesale or retail perspective. And that might mean they're going to place more orders in the future. So that's the one bit around business investment, because inventories are part of that big investment pie that is a little bit of good news here.
Interesting. When it comes to business investment, it also declined, though, due to weakness in residential activity. So can you explain that, and also what factors played into that?
Yeah, well, I think, the residential, it's essentially the existing housing market has been depressed for quite some time now. We're seeing key markets, especially in Toronto and Vancouver and others, really essentially prices softening and essentially sales activity slow. So it's not surprising that we're seeing residential investment overall, both in terms of new housing, but also in terms of the financial, the financial activity with sales that adds to that part of the economy. So and I think part of that, of course, is the demography. We've seen a slowdown in demographic growth. We've actually had negative population growth now because of what were the new policies around non-permanent residents and immigration in general.
I'm not sure if that plays into consumer health as well. What do you read out of this report that indicates what level we're at when it comes to consumer health?
Yeah, well, consumers, that certainly doesn't play in overall consumer spending. But when we look at the accounts, we did see some weakness in consumer spending. Let's not forget, too, that consumers were kind of the pillar of economic growth through that weak period in the first half of the year when exports were failing. And now in the third quarter, we had weakness in consumer spending, but now that's kind of rebounded a little bit. So there is a little bit of good news there. I still worry about how sustainable that is, given that a lot of consumers, a lot of households are still turning over or renewing mortgage debt that they took on in 21 and 22 with very low mortgages. And now that strain of higher debt financing costs is still affecting consumers. We know that. But yet, in the fourth quarter, at least, they held together fairly well. So that was a little bit of good news there as well.
Okay, so some good news coming out of this report, it sounds like, or some reasons to be slightly optimistic. When it comes to this environment that we're kind of in right now, we've been seeing this low hire environment. Do you expect that to continue?
Yeah, and unfortunately, while we did see a few good indicators in the last couple of quarters, When we look ahead, if we don't get some sort of resolution here with respect to our trade with the U.S., I think this is going to be more of the same. And the weakness going into 2026, I mean, there's not a lot of job creation as we enter this year. So last year, in fact, at the end of 2024, we still had quite a bit of with the economy had started on a strong footing. When we look at what's transpired through all of 2025, has been quite weak. And of course, in the last quarter, we've got a negative. So I don't think there's a lot of good news for this year unless we get some sort of trade deal worked out with the U.S. That's really critical to getting things back on their feet.
And that's where I want to end things. Like, I'm kind of asking you to predict the future, but just in terms of how you see things going, how do you think those renegotiations will go? Do you think we're still going to see, tariffs coming from the U.S. for the remainder of this year?
Well, it's a big question mark how long this lasts. I do believe that, as we've seen it time and time again, that there's a lot of more threat and a lot more bark, if you'd like, than bite with respect to tariffs. Both in President Trump's first administration in 2016, we did eventually get NAFTA renewed as CUSMA, our new trade deal that we're working with. This time around, it's been a similar story. I know there's a few sectors that have been very, very hard hit, but generally speaking, we still have most of our goods traveling tariff-free. We just need to get some certainty, because what's holding back business investment is that uncertainty. They don't know what's coming, and they're not willing to put investment into place or hire if they don't know what the future holds. So it's the uncertainty really that's hitting us here.
Okay, we'll leave it there. Pedro Antunes, Chief Economist at the Conference Board of Canada. I appreciate your time and your insight as always. Thank you.
Thank you.